Ever wondered how your financial future could look if you dabbled in the stock market? Imagine a world where your money works for you even while you sleep. A world where your hard-earned cash doesn't just sit in a bank account, but grows and multiplies. This is not a fantasy, it's the realm of stock market investing. In the next 7 minutes, we're going to embark on a journey that will demystify the stock market and show you the ropes on how to start investing. We're not talking about getting rich quick or taking unnecessary risks. We're talking about sensible, informed investing that can help secure your financial future. We'll explore the potential benefits of investing in the stock market, the risks involved, and how to navigate them. We'll delve into the nitty-gritty of stocks, bonds, ETFs, and more. So buckle up, because this is going to be a thrilling ride. If thoughts of the stock market have sparked your curiosity, then this guide is just for you. Before you dive in, it's crucial to understand what the stock market is and how it works. So let's start with the basics. The stock market is a marketplace where buyers and sellers trade shares of publicly held companies. These shares, also known as stocks, represent a portion of ownership in a company. When you buy a stock, you're essentially buying a piece of that company, and as an owner, you're entitled to a share of the company's profits. Now, how are stock prices determined? It's all about supply and demand. When a company first decides to sell its shares to the public, it undergoes an initial public offering, or IPO. The company and its investment bankers will set an initial stock price, and shares will be sold to the public at this price. From then on, the price of each stock fluctuates based on the laws of supply and demand. If more people want to buy a stock than sell it, the price goes up. Conversely, if more people want to sell a stock than buy it, the price goes down. This brings us to another important concept: the stock exchange. A stock exchange is a physical or digital place where stock buyers and sellers meet to conduct trades. Some of the most well-known stock exchanges include the New York Stock Exchange and the Nasdaq. Now, let's address some common misconceptions about the stock market. Some people think of the stock market as a gamble, a risky game of chance. While there's no denying that investing in the stock market involves risk, it's not purely a game of luck. Successful investing is based on research, strategy, and an understanding of the market. It's about making informed decisions, not just rolling the dice. Remember, the stock market is not a get-rich-quick scheme. It's a tool for building wealth over time. Investing is a marathon, not a sprint. It requires patience, discipline, and a long-term perspective. Now that you've grasped the basics, you're one step closer to making your first investment. With a clear understanding of the market, you're ready to take the next step: investing. Starting your investment journey might seem daunting, but it's actually a straightforward process. Here's a step-by-step guide to get you started. First, set your financial goals. Ask yourself, why are you investing? Is it for retirement, to buy a house, or just to grow your wealth? Your goals will shape your investment strategy. If you're looking for long-term growth, you might lean towards more aggressive stocks. But if you're saving for a house in 5 years, you might prefer safer, more predictable investments. Next, you'll need to open a brokerage account. This is the platform through which you'll buy and sell stocks. There are many brokerages out there, each with their own pros and cons. Some offer in-depth research and analysis tools, while others focus on user-friendly interfaces and low fees. Take the time to research and find the one that best suits your needs. Now, it's time to choose your stocks. This is where your understanding of the stock market comes into play. You'll want to look at a company's financial health, its competitive position, and the industry it operates in. Keep in mind, it's usually a good idea to diversify your portfolio. This means investing in a mix of different stocks to spread out your risk. Once you've chosen your stocks, it's time to make a purchase. Decide how many shares you want to buy and place your order. Remember, investing is not about making quick profits. It's about building wealth over time. So don't panic if your stocks don't perform well immediately. Finally, monitor your investments. Keep an eye on how your stocks are doing and stay informed about any news that might affect their performance. But don't obsess over daily fluctuations. Remember, investing is a long-term game. With these steps, you're well on your way to becoming an investor. Investing in the stock market can seem daunting, but armed with the right knowledge, you can make informed decisions. Let's quickly recap what we've discussed today to make sure you're ready to dive into the exhilarating world of stock market investment. Firstly, we covered the basics of understanding the stock market. Remember, the stock market is essentially a marketplace for trading securities, such as shares of stock and bonds. It's a dynamic and ever-changing landscape where prices fluctuate based on supply and demand. Companies issue stock to raise capital, and investors buy these stocks in the hope that the company will grow and prosper, thus increasing the value of their investment. Next, we delved into the steps to get started with investing. We emphasized the importance of setting clear and realistic financial goals. Are you saving for a retirement, a down payment on a house, or your child's college education? Your goals will shape your investment strategy. We also discussed the need to understand your risk tolerance. Investing always comes with some level of risk, so it's crucial to assess how much risk you're comfortable with. We also explored the importance of diversification by spreading your investments across a variety of assets. You can mitigate risk and potentially increase your chances of achieving a positive return. And let's not forget the importance of regularly monitoring your investments. The stock market is not a set it and forget it game. Staying informed about market trends and adjusting your portfolio as needed is key to successful investing. Finally, we highlighted the importance of making informed decisions. Investing isn't about jumping on the latest hot stock tip from your buddy at the gym. It involves careful research, thoughtful analysis, and a keen understanding of market dynamics. Remember, the journey to financial success is a marathon, not a sprint. So take your time, do your research, and happy investing.